Hey everybody, it's Chuck Barone back in the chair on Wednesday, March 13th, 2024. I got to tell you guys, it's great to be back. I have not had a very good past 10 days or so. Let me explain the story before I get rolling here because you guys, you saw the post on our YouTube channel that I hurt myself working out. I did. I tore a groin muscle and just basically wrecked myself. I've been spending the last 10 days with lots of ice packs on me and Advil taking, but I'm back upright again. Don't ask me to touch my toes though. But I feel much better and it's good to be back. It is very good to be back. I just want to take a second now before I get started with the show, as always, to welcome everybody who's here. We appreciate your support. We know we've had our travails recently on the show here. Just started getting back going, and then we had this, but hopefully this will be the end of it and we can get everything flowing smoothly again. That would be my goal. Anyway, guys, let's talk about these markets today. We got a lot to go over. Stock markets today taking a little bit of a breather. We got some terrible, well, what I would say not so great, terrible inflation news yesterday. The market's kind of shrugging it off, taking a little bit of a breather today. Market's ending mixed. You have the Dow actually gaining 37 points today, sitting at 39,043. The NASDAQ falls 87 points at 16,177. And the S&P falls just 9 points at 5,765. So not much action in these markets today. The market's kind of waiting now for new data to come, a little bit more opinion from the people whose opinions are important. But I'm telling you guys, that CPI number yesterday, along with the higher PCE number, just tells us it foreshadows what's coming. Okay, to get the Fed number back down to 2% is going to take a lot more time than everybody thinks. It's going to be a lot more difficult than everybody thinks. And we're going to have way more setbacks, just like we've had over these past few months. Let's face it, the inflation numbers this entire year so far have not been so great. And you can see that at this point, the Fed has not done enough to get markets down, or to get the inflation number down to 2%. So, what do you think is going to happen next? Do you really see rate cuts coming? I kind of laugh when I hear about that. They think that just because the Fed raised rates, now they have to cut them. They don't. The Fed needs a reason to cut rates, just like they needed a reason to raise rates from the rock bottom, almost zero they were at for so long, needed this big inflation. And at first, you remember, they denied the inflation existed. They called it, then when they acknowledged it existed, they called it transitory, wanted to blame it on this, that, the other thing, not the reality of they're just printing and spending money like it's infinite and they can do it forever as much as they want. And here we sit. Anyway, moving on from stocks to the bond market. Bond market selling off today, not in a big way, but you can see what's coming. The 10-year up 3 basis points, now at 4.19%. The 2-year at 4.63%, up and also up 3 basis points today. Now you remember, it wasn't that long ago that those bond yields were significantly higher than they are today. That tells us what we can kind of expect here. The Fed, if they don't get it together, okay, if they don't make it happen with, getting this number toward 2% really soon, bond market yields are going to continue to rise. And all that new money that flooded into the bond market is going to be sitting on losses, and you're going to have a lot of unhappy investors. That's kind of where we're at. Now, the interesting thing about all this inflation is you would think with the inflation numbers high and the market kind of adjusting to, well, maybe we're not going to get 5 rate cuts this year. Oop, they're going to be starting a little later than we thought. You would expect the dollar to be strengthening. Higher rates tend to lead to a stronger dollar, but it's not. In fact, coming down again today, down small, but still sitting now below 103. It was just on its way up to 104 just before I had my injury. Now sitting at 102.82. So the dollar weakening in the face of this inflation. But I think what's happening is people understanding the dollar being devalued, moving into alternatives for dollars, and you're seeing those alternatives sizzle, 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 right? Look at gold today. Gold and silver. Now, we've been talking about this on the show quite a bit. Gold rallies up again today, up $14.70, $2,173.10 for an ounce of gold. You're going to see, you know, it's just now gold has basically solidified itself well above the 2000 number. So I don't know if we're ever going to see gold below 2000 again, or probably a long ways off. And I've been telling you guys that silver is the lagger, so been lagging. Guess what? Silver starting to catch up, rallying up 83 cents today, $24.92. And I was telling you guys it was $22, $23. You're going to see $25 silver any second. What's happening is smaller investors, silver a little more attractive, a little more affordable. You get a little more bang for your buck. And you buy 2 ounces, $200 worth of gold, you don't get very much, right? Less than a tenth of an ounce. You buy $200 worth of silver, well, you get something you can feel and hold in your hands. You're going to see silver continue to rally. Oil, another dollar alternative commodity, is moving higher, continuing to rally up $2.11 today. Now at $79.67 for a barrel of West Texas Intermediate, way too high above our trough. We're going to have to re-examine this and rechart it, see how it looks, if we're going to adjust where our trough is. I still tend to believe that oil's a little bit high at this number, but the markets move where the markets want to go. And as people are moving out of dollars, moving out of cash positions, oil's a sensible place to be putting your money, right? And Bitcoin, my friend, Bitcoin continuing its roll up $2,223 today, now sitting at $73,409 last I checked. I tell you this, guys, Bitcoin is on its way to $100,000. All right, so let's talk about some news you need today, some stuff we need to talk about. I haven't been here for a little while. I want to talk about CPI. Came out yesterday, market trying to, as I always call it, polish a turd into a gold bar. Guess what? It's impossible. They want to make these numbers okay, yet a top line CPI at 3.2% inflation, yet core at 3.9% inflation. These numbers are just too high. Core inflation, that excludes gas, food, right? The volatile stuff. If that's up 4%, guys, we're in deep doo-doo, because I'm telling you, a gas price is going down in your neighborhood. They're not here in Vegas. And I was at the supermarket yesterday, and I'm telling you guys right now, it was a shocking thing, man. I was so disappointed. Now I'm shopping at a Walmart neighborhood market, which most people would consider to be discount. A 12-pack of soda, just a simple 12-pack of Pepsi or Coke or whatever, almost $8, guys. Almost $8 for a 12-pack of soda. Now, I used to buy them on sale all the time, 4 12-packs for $10. Now, obviously, this is not a sale price, $7.80, but it's just an absurdity. They're going to price themselves out of the market, man. And everything I went and bought in that store, the price was significantly higher than the last time I bought it. I don't really believe these prices are going to come back down. We're going to be living with this new normal, and it kind of sucks, man. So how do you believe that we need stimulus in this economy? You think interest rate cuts are going to help the price of groceries or the price of anything? I was reading this. They were saying insurance costs in the U.S. are contributing to this inflation in the worst possible way. Listen to this, guys. And I'm sure you've seen this in your own lives, because I know I have. Auto insurance, year over year, up more than 20%. Really? Now, I'm a guy, I haven't had a claim on my insurance in more than 30 years. Haven't had a traffic ticket. Haven't had anything on my record that's negative. My insurance just keeps going up through the roof. Homeowners insurance up more than 12%. And we all know what's happening with health insurance. Anybody that has it, they always do the same thing. They give you less, they charge you more. So this insurance stuff, and even Powell's starting to complain about it now, contributing heavily. So you don't even know where these inflations are. But what seems to me like they're hitting the stuff that people can't live without. Food, transportation, utilities, auto insurance. Here in Nevada, it's mandatory. You have to have it. They're just killing people where even the basic necessities of life are unaffordable. And you can only go so far looking for discounts on food, on car insurance. So it's just really a disaster in the making here. And I'm afraid, guys, that it's just not going to get any better. They want to keep painting this rosy picture. Ordinarily, during an election year, the economy tends to have a pretty good year. I just don't see it happening this year, guys. I don't see it. Now look at gold and silver. These are always basic fundamental hedges against a weak dollar. Look what they're doing. This also foreshadowing what's going to happen in the future. At the same time, if you look at Wall Street, supposedly the best and the brightest, they're still factoring in rate cuts. They think we're going to get the first rate cut in June. I'm telling you guys, that is not going to happen. They're still factoring in 3 rate cuts this year. I'm telling you guys, unless something happens terribly to the economy, that is not going to happen. Just not going to happen. The Fed needs a reason to lower rates. They need a recession. They need massively rising unemployment. They need business earnings falling, collapsing. Are you seeing any signs of that anywhere? No. So why on earth would they start cutting rates in just a few months? Tell me. Rate cuts are stimulus to the economy. When you stimulate the economy, that tends to be inflationary. When you have an inflationary environment you're already in, and now you're going to stimulate the economy, that's how you get 70s, early 80s style stagflation, with inflation climbing, a crappy economy, and everybody just miserable, right? Now remember, guys, what have we been preaching on the show? What have we been telling everybody? Save as much as you can. The number we're trying to target, I haven't talked about this for a while, but the number we're targeting is 25 grand. I know a lot of you guys may be past that in just whatever stage of your life you're in, okay? But what we want to do is save and put together our $25,000, what I call your FU fund, right? Just in case you got to tell the boss FU, and something goes wrong in your life, whatever it is, price increases, rent increases, whatever, car repairs, the shocking stuff that most people aren't prepared for. The way it was taught to me by my mentor, the genius, if you're living your life correctly, you should never have a problem that $25,000 won't get you through. Now, obviously, if you're committing big crimes and you need attorneys, that may not work. If you're just one of us, just one of the schmuckatellis, well, guess what? If you lose your job, you're probably going to find another one before you go through $25,000. You have an auto situation. Even if you had to buy a new car, your car blew up. You can get a car, pay cash for a car, and start to rebuild your FU money. It's the fundamentals of wealth. It's one of the most basic things you got to do, because that's the foundation. That's what lets you sleep good at night. That's what lets you know you're on the right path. That's what tells you that you're secure. So it's so important to build that $25,000 savings up. And don't worry about investing it in big returns. The idea is not to make money with it. The idea is it's your security blanket, so that through all the inclemencies of things that are going on in this world, you know that in 99% of the cases, you're going to be just fine, right? What else have we been preaching? Get out of debt. Don't add on new debt. I know it's really hard to do, especially right now. Times are tough. Although, are they really? The economy says no. And my personal experience, I guess I'm not the right person to judge it by, being in mortgage and real estate. Our industry has just been in the crapper for 2 years now since they started raising rates. Mortgage people started freaking out when rates were 5. Well, now they're at 7 and been there for a while. Guess what? It does not do wonders for real estate buyers, especially first-time buyers. So the market being dominated by institutions and investors, not a good thing for our future as far as homeowners go. So the picture looking a little bleak right now. Not a lot of good news to report. But the one good thing we can say is, if you've been listening to this show since we started it almost 2 years ago and been following the advice we've been giving you, you are better off than 99% of your friends. You've actually been putting money away. You've actually been eliminating the debt. You've been investing conservatively. You've been buying the things you need and want. You just haven't been wasting money. You've been doing all the basic fundamentals correctly. And that puts you in a place where, even though the world's falling apart around you, your world isn't. And that's a pretty helpful, pretty happy feeling, at least for me, right? Anyway, guys, that's it for the day. We appreciate everybody being here. I hope this camera angle is better for you guys. I got a lot of nose hair comments about the camera angle last time we did a show. We're going to continue to improve it. I got a tripod on the way to set this camera up so we'll have a better angle for it. We'll be back tomorrow. Hit me up with your questions and comments. I'm going to be online today with all of you guys going through all that stuff, hitting you, responding to your guys' messages. We appreciate your support, guys. We really do. We're going to get this thing back on track and get it rolling. Be back again tomorrow. Until then, guys, take care.